Good day, everyone, and welcome to my platform. Today, we're going to look at mathematics, exponential function, part 2. Looking at where we stop off the other time, this is still my textbook, Teach Yourself Mathematics. Teach Yourself Mathematics. Teach Yourself Mathematics. Teach Yourself Mathematics. Still on exponential function. I'm going to take another question today to wrap it up for this exponential function so that some other time we'll look at the other aspect of mathematics. Examination question will also come in this way. Simplify. For those of us preparing for SS1 class, SS2, SS3, and undergraduate, some indices like this will be very important to know. Simplify. 25 raised to the power of 2 over 3 divide by 25 raised to power 1 over 6 all over 1 over 5 all raised to the power of minus 7 over 6 times 1 over 5 all raised to the power of 1 over 6. You will agree with me here that these are the laws. 25 is the base. The power is a fraction, 2 over 3. Divide by 25, which is also a base, raised to the power of fraction, 1 over 6. The denominator, the base is 1 over 5. And the power is minus 7 over 6. Multiplied by another base, which is also 1 over 5. Raised to the power of 1 over 6. Without wasting much of our time, from our laws of indices, when it's division, recall this, recall 1, that x raised to the power of n times x raised to the power of n, the law will join the two together, the bases are the same, write one of the base and join them together. Second one, x raised to the power of n divided by x raised to the power n. When the bases are the same, and division is what you are seeing here, it will turn to subtraction of the powers, n minus n. Seeing the law, seeing what is on the board, the numerator is division. So we are going to write the base down and do a subtraction of the powers. The denominator, the base is 1 over 5. We are going to write one of the base and add the powers together. Our knowledge of these two indices formulae will help us in solving this particular problem. Without wasting much of our time, 25 is the base, so write 25 raised to the power of 2 over 3 minus 1 over 6 all over 1 over 5, which is the base, raised to the power of minus 7 over 6 plus 1 over 6. If you take your time to run that power, it simply means 2 over 3 minus 1 over 6 for the numerator. The LCM here is 6. 3 in 6 is 2. 2 times 2 is 4. 6 in 6 is 1. 1 times 1 is 1. And you're having 3 over 6, which will give us 1 over 2. Without wasting much of our time, for the down one, the numerator is 7 over 6 plus 1 over what? 6. The LCM here is 6, and this will be 6 in 6, 1. 1 times numerator plus 6 in 6, 1. 1 times 1. We're having minus 6 over 6. And here is giving us minus 1. From all indication, 25. Our fraction is 2 over 3 minus 1 over 6. The result there is half. All over the denominator is 1 over 5. All raised to the power of minus 1. You can see for yourself that the power of 25 is having half. And that half simply means square root of 25. And the square root of 25 is 5. Or that 25 can be written as 5 raised to power 2. Multiplied by half, it will still give us 5. For the denominator, what is in the bracket is 1 over 5. And that minus 1 simply means inverse of what is in the bracket. What is in the bracket is 1 over 5. The inverse of 1 over 5 is 5. Automatically, the numerator result is 5. Denominator result is also 5. And our final answer is one whole number. Ladies and gentlemen, viewers, you can see for yourself that this is how to break down this question that relates to laws of indices or exponential function. Without wasting much of our time, you can go through this. All this is in chapter 1 of my textbook, Teach Yourself Mathematics, for SS1, SS2, SS3, and students in tertiary institution. You can call me. You can send your comment in the comment section there. If you want extra classes of mathematics from SS1 to any level, you can call the author of Teach Yourself Mathematics to give you an online coaching. God bless you. Until we meet again. Bye for now. Happy New Week, my people. We are moving on to finance. We want to look at future value of money, compounding continuously. Examination question can come like this. Okay, continuously. Has a formula. These are the formula will look like. Future value, P, E, raised to power R, N. Anytime you're asked to find the future value of money, compounding continuously, the formula changes from what we know before. It will be future value of money equal to present value times E. That E is expected value, that's exponent. R, that is a rate of interest. N is the number of what? Years. Without wasting much of our time, examination question can come like this. If the question says find the future value of money. Find the future value of money. Find the future value of money. Maybe 20,000 naira. Invested for maybe 3 years. Compounding continuously. Compounding continuously at the rate of 5%. You are expected to find the future value of money. Our formula goes thus. FV, the present value is 20,000 naira. Multiplied by E. The E is defined as 2.1732. All raised to the power of R, 0.05, multiplied by the number of years. That's how the formula will look like. Look at it very well. Look at what I've written very well. Shoma. Seeing the board carefully, that E is what we call exponent. It's 2.1732. That is the meaning of that E. Your calculator will give you that value. So that is raised to the power of 0.05, which is the rate of interest, 5%. The number of years is 3. So we'll have that value on the board. We'll multiply it together. That is 0.05 times 3. I believe by now you are pressing your calculator, which I believe will arrive. So from all indication, it is 2.183. So 2.1783. So our E is equal to 2.1783 approximately. So our E from this formula, now we'll put it here, raised to the power of 0.05 times 3. And your calculation will be so easy. Future value will be 20,000 into 2.1783, all raised to the power of 0.15. So you press your calculator, 2.173, 1783 raised to power 0.15 multiplied by 20,000. We'll get the value. So press your calculator in that manner. Let me run my own calculator by saying 2.1783 raised to the power of 0.15. Multiply the results by 20,000. 2.1783 raised to the power of 0.15 multiply by 20,000 naira. Answer. And that will give us 22,000. It will give us the future value. The future value compounding continuously will be 22,477.48 kobo. And that is the answer to this question. In the last class, we talked about future value of money, compounding yearly, per annum. We also looked at the future value of money, compounding daily, weekly, quarterly. And here we have come to the end of the future value of money, the third one, where we need to compound continuously. And this is the answer to this problem. By the time we come next class, we'll be looking at present value of money. On that note, God bless you. If you have any question, put it in the comment section. I will attend to it. You can call me if you need online coaching. God bless you. Happy Sunday, everyone. This is a cash book, part 2. If you look at the board, the question says, prepare cash account of Jane, post to the ledger, and extract a trial balance from August 1, August 3, August 7, August 10. Last week, we were able to prepare Jane cash account, debiting money coming in and crediting money going out. And the cash book is what you are seeing on the board. From that cash book, I'm going to apply the principle of double entry in posting to the ledger and extracting the trial balance. Remember, double entry principle says for every debit entry, there must be a corresponding credit entry and vice versa. All the transactions on the debit side of the cash book will be credited, and the one at the credit side of the cash book will be debited. And thereafter, a trial balance will be extracted, and that will mark the end of the class. Without wasting much of our very good time, I'm going to clean the top most, and I'll post to the ledger. Look at the board clearly. What you're seeing now is the cash book. You're seeing the cash book. There's the cash book. There's the debit side. For every debit entry, the first one here is capital accounts. Capital accounts.